Welcome to Startups and Small Caps. I'm Kim Parley. A bit later in the show, I'll talk to the head of Liberty Fund Management about some new micro-cap funds that you can buy if you want to round out your portfolio.
Foreign market investors can now get their news from the source, where it happens, when it happens. For overseas business headlines and in-depth market reports with a Canadian perspective, join Mark Bunting in London, England, every weekday morning here on Report on Business Television.
Welcome back to Startups and Small Caps. Our next guest is trying to make investing in micro-caps accessible to everyone. He's setting up 3 micro-cap indices, which will be tracked by 3 mutual funds. To tell us a little more details, we are joined by Greg Beckett. He's the Chairman and CEO of Liberty Fund Management. Thanks for coming in.
Kim, thanks for having me on the program.
What's a micro-cap? How do you define a micro-cap?
Well, the way Canadians define it is a little bit different from Americans. Our micro-cap index is $2 million to $100 million micro-cap.
2 million to 200.
Yeah, market cap.
Okay.
So those are the companies that are in this index. Our closest competitor is the Russell micro-cap, but their average size company is about $420 million US. Our average company is about $12 million Canadian.
Okay,
so maybe you'd call us nano cap.
That's the term they use in the States is the nano cap for the really tiny companies.
Yeah.
So you're setting up 3 indices.
Correct.
And these indices have how many stocks in each one, and what are the composition of these indices?
So it's as I mentioned, every company between 2 million and 100 million in North America. So that's approximately 200 companies on our microcap gold, 200 on the oil and gas, and 200 on the resource. So collectively, there's about a $4 billion market cap on these indexes. So our slogan is the microcap solution for the large cap investor. So buying a unit of this $4 billion index is like buying a share of a large cap company.
And does it gives these large institutional investors access to something they didn't have access before? Is that it because they didn't want to invest in these tiny companies?
Yeah, not only did they not want to, but many of them are prohibited from doing it. They may have restrictions where they can't invest in a company below 20 million or 50 million market cap. And I've been hearing comments over the years that, wow, I really like that company. I wish I could invest, but it's only got a $9 million market cap. And I got to just wait until, the stock prices quadruple what it is or more before I can even get exposure to it. Mm-hmm. Or I've heard brokers say, yeah, I could invest in that, but it's so thinly traded. If I put my client in, I'd be afraid I might never get them out again. So, love the company, but I just can't buy it.
Well, I guess that comes to my next question in terms of venture capital companies. When they go to look and invest in new ventures, which is similar somewhat, they invest, say, in 10, 6 fail completely, 3 perhaps break even, and 1 is a huge star. And they spend time doing a lot of due diligence going and talking to each one of these companies. How do you do that if I'm assuming you just the manpower to actually go through it and research these companies would be really difficult?
Well, that's the whole idea behind an index is that, you just set the market cap parameters and you've got 200 in the basket. And, at the end of the day, as you say, you can do all the research you want and you never really know. Some of them hit the dirt, and the ones that you didn't think were going to do well, just for whatever reason, they go to the moon. So I mentioned that buying a unit is like buying a share of a large cap company, but in many ways it's safer than buying a single large cap company because, we've seen the Enrons and the WorldComs, hit the dirt. And, if you've got a basket of 200 stocks, some of them will go under, but while that's happening, other ones will be 10 baggers. So
you're playing the odds here.
Exactly.
You're hoping that you're going to see something. Do you have a lot of large cap investors who are ready to go and signed up for this in terms of getting involved, or who are you marketing this to and how?
Well, we just launched the 3 indexes last week, and
how? So they've been trading now tracking trading.
Yeah, just about a week, and we're just starting. We're next week or 2 we'll be launching the funds to mirror those indexes. So we're right now in the process of going out to find some partners, some brokers to work with. We're looking for 1 in North America, 1 in the United States, and 1 in Europe. We're raising $200 million for each index, so a total of $600 million. And our target is to own 5% of each of the companies. Mm-hmm. We didn't want to go much beyond 5%.
That's a big chunk, though, for a microcap to own 5%, isn't it?
Well, we looked at the trading patterns, and we felt comfortable with that, but we didn't feel that we should go much higher than 5% because we'd run into liquidity issues.
Right.
So that's kind of the stage we're at right now. We're just going out to the market, just selecting our broker partner, and then we'll be out offering it.
In terms of accessibility, have you decided what the minimum investment will be for people who are interested in the fund?
Initially, just this initial round we're doing is going to be $500,000. But in 3 to 6 months, we'll open it up to the retail and bring it down to $10 a unit.
Who else is doing this? Who's your competition?
Russell is the closest one.
Which is a level above?
Yeah, it's 2,000 companies, and it's all sectors. They're not specific in gold or oil and gas. And, of course, they're kind of what we would consider large cap. Over $400 million is the average size. I'm
going to bet that while you've, of course, just initially launched these indices, you've been tracking this for an awfully long time as you probably figure out what works and what doesn't. How have microcaps performed over the past little while as compared to just the TSX or the Dow even?
Well, I guess most people know, and most of these fund managers with their CFAs understand that as you go further down the risk-reward continuum, that microcaps have traditionally outperformed small and mid-cap companies. The problem is they've been more volatile and more illiquid. And so what the whole purpose is to help with the volatility by having a basket of 200 and reduce some of the liquidity by also having that basket.
Why hasn't somebody else done this before? What's the barrier to getting involved? Is it just the liquidity of these tiny companies?
I think the reason that no one's done this before is that you can't make it a really huge fund. Once we get to $200 million, that's about as far as you can take it. So, you know, it's not going to turn into a $20 billion fund. And
would you launch some more funds? I mean, you mentioned that you've got the gold and you're looking at 2 other indices. What about a general business indice or sectors, healthcare, something like that? Is there enough companies to populate the indices?
Yeah, we would look at others. Renewable energy, perhaps. Yeah, we would look at others.
Very interesting. Greg, well, we wish you luck, and we'll be tracking it and hope to find out more soon.
Okay, thank you, Kim.
That is Greg Beckett. He's the chairman and CEO of Liberty Fund Management. Stay with us. When we come back, we're going to be talking to Scott Callan. He's with House and Tattersall. He's going to tell us who his small cap picks are for the evening. Don't go anywhere.
It's lunchtime.
A fast, comprehensive look at the morning markets in action and what lies ahead for the afternoon.
If you don't have time for a long lunch but need the essentials, spend your lunch with us.
Lunch Money with Michael Hayesworth, weekdays at 12 p.m. Eastern on Report on Business Television.